please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
1:30. Let's get in Ashwani Gujral, who's with us right now. Ashwani, thanks very much. Good afternoon. 30 points lower. I mean, if I were to ask you to hazard a guess in terms of a view, actually, for the next 2 hours till closing, what would it be?
Well, in one line, picture baki hai mere dosts.
Arey wah.
Okay. I expect last couple of hours to be fairly brutal because while you have come off the lows, today's bounce back is nothing in comparison to yesterday. And all of this, bounce back is very easy to engineer. You push up HDFC Bank, HDFC, and Bank Nifty suddenly starts to look better. I think all that will change. Given the weakness that we've seen, persistent good global cues, but we tend to come off. The lower end of the band is now under clear threat, and I would not be surprised if that gets taken out on at least the Bank Nifty, because if now IT is also starting to correct, chances are that the Nifty would have pressure from both sides. This sort of market breadth consistently, it's very difficult for the market to construct any kind of meaningful rally with 300 stocks being higher. We have to break down whether we do it in the next couple of hours or on Monday. It's a very clear trade that you get short, and possibly now your stops are even lower, say 25,370 on the Bank Nifty futures. On the Nifty futures, you can keep a 10,530 type of stop. But next couple of hours, I expect a breakdown to happen.
I mean, should we have another strong global day, will that, prevent this kind of a big sort of drop that you're predicting, Ashwani, or no?
Well, if 3, 4, 5 global up days didn't help, chances are this may also not help, because the point is there is something which is bothering this market. You have long-term capital gain tax, now you have frauds, now you have a problem with MSCI. This is a market, it's a can of worms. If it was a stock and I had 10 stocks, this would probably be the stock I won't look at. So we're not exactly in a great favorable position right now.
Okay, so your bearish view largely is to do with banks, right? I mean, that's the focus.
See, once the banks start to fall, everything else collapses with it. So, the matter ends. There is, some sort of crisis of confidence that I can see. All the news of PNB, etc. is out, but the Bank Nifty doesn't seem to be bothered. In fact, even the good banks like, IndusInd Bank or ICICI Bank, etc., they are also selling off. So, it's saying something. Either we can, keep our eyes closed, or we can take the market's message.
Okay. What are your stock trades, Ashwani?
Well, as we speak, the Bank Nifty has broken yesterday's low. So I feel there will be follow through here. As far as stocks are concerned, Brigade Enterprises a buy with a stop of 284, target of 302. Tata Motors a sell with a stop of 375, target of 358. And Indo count is a sell with a stop of 102, target of 90.
Infra Engineering, the IPO will open on the 26th of February, and the company is looking to raise about 460 odd crores at an issue price of 263 to 270. Harendra Singh, the MD of the company, now joins in. Mrs. Singh, thanks very much. Could you give us a sense of what's your outlook on revenue growth, and do you expect to maintain this 35% run rate current?
No, for say 1 or 2 years, whatever we have been doing in the past, it is almost 35% plus growth. And industry is growing good. Say, we could see that we would be achieving those numbers.
Could you talk to us a little bit about what the current order book looks like and execution rate, yearly execution rate?
Say order book unexecuted as of November, it stood about 3,400 crores, and you can see the order to bill ratio in the past years has been quite good. It is almost 30 to 35%, and we could say have the same number during the coming years as well.
Okay, so what are the sectors that you're seeing traction in, and are you looking at venturing in any other space apart from highways?
Government focus is very specific on the highway, so it's not like that we have done few water supply projects in last 2-3 years as well. So as of now, you can see that highways primarily, as far as the government focus is there, we would be targeting more into highways only, but we cannot rule out that railways, etc., etc. Say runways, airport development, because they are the similar nature of projects.
Right. Could you talk to us a little bit about, I mean, your geographical spread and what you would want to do to reduce the dependence on Rajasthan?
Say, as of current unexecuted order book, it is almost 45% is in the state of Rajasthan and 48% is in the state of Maharashtra, and remaining in other states like it's in Haryana, Arunachal Pradesh or UP. And we are present in 7 odd states, and it's mainly focus would be that its geography is not a constraint with us. Like we have already worked in 7 states, we are working here, and then we can see going further work in those states where situation and congenial atmosphere is available. Availability of material, good working months are available.
All right, just a second, sir. There's some news flow coming through that within a week, Nirav Modi and Mehul Choksi have to appear before the ED. Summons have already been issued earlier this morning. Also, there was a flash which read that the quantum of the jewellery, etc., the stocks which have been seized at Surat was way more than what was being entered in the books. I suppose a corollary of the fallout, actually, of a bigger scam. But in any case, Mr. Singh, coming back to your company, will you be able to maintain margins at the 14% odd that you're currently doing?
This is mainly while we are working to around 8 to 12, we were working as a main, 70% of the revenue was coming as a subcontractor. And now with this, it's almost reverse. It's almost 70% plus the contracts we are working now as a prime contractor directly from the government. So that makes a difference. We are working to the EPC projects where the design in any case is with us only. So we are targeting and we are looking at fairly good margins going ahead.
In terms of receivables, is there is it a large lag, or it's not an issue?
So this is as of say 30th September 2017, it was 85 crore.
All right, Mr. Singh, thanks very much for joining in. So that's the HG Infra IPO, which will be opening on the 26th of February. But there's another news break actually coming through. We understand that HDFC's general insurance arm is looking at an acquisition, so further consolidation in the insurance sector. Nisha Poda, my colleague who's breaking this news, has more details. Nisha.
Thanks for that, Sumaira. Of course, sources with direct knowledge, I've been speaking to quite a few in the insurance sector. They say that consolidation is the time or the buzzword for the insurance sector. What we do gather is that HDFC, after listing its life insurance arm, is now looking at creating enough value in the general insurance arm as well. So HDFC Ergo is getting very acquisitive in nature. And not just is it in fray to buy out Star Health, for which a bid process is on, it is in talks with Apollo Munich to buy out the company. Now, what I do gather is that the transaction could be such, if talks fructify, that HDFC Ergo could land up buying a substantial portion or all of Apollo's stake in Apollo Munich, which is a pure play health insurance company. And remember that the Munich, which is the partner in Apollo Munich, is the parent company of Ergo. So there is a commonality of shareholding as far as the German-based partner is concerned. And therefore, Munich can really stay on along with Ergo in the combined entity of Apollo as well as HDFC. That's the acquisition and that's the deal that they are really looking at. So docs at preliminary stage, but remember that HDFC Ergo is quite aggressive at this point. But given that Star Health's bid process is also very aggressive, with ICICI's insurance arm also looking at it. This could be something that HDFC ERGO could be really very, very interested in. As far as numbers are concerned, it's an unlisted company, Apollo Munich. So what I have gathered from my sources is that it could be ending with a total revenue size of close to about 1,700 odd crore rupees in this particular year. And remember, 65% is the kind of ratio that they have in terms of claims. So those are the numbers which can really define the valuation of the company. An expert in the industry said that it could be close to about 3,000 odd crore rupees. And as per the last transaction done by ERGO in HDFC ERGO, it really values HDFC ERGO a little less than 10,000 odd crore rupees. So this is an estimate of the size that we are really talking about in these two companies, but it'll be a large transaction in the general insurance space if it were to happen.
Right. And so essentially 51% of 3,000 crores is what we're talking about, the block which may be sold.
Yes.
I mean, if the figure is 3,000 crores approximately.
Yes.
And Apollo, I mean, it's the same Apollo which is listed, or?
No, it's a closely held company. So it is from the Apollo group. Apollo Energy lands up owning in Apollo. So that's
no cross-holding or anything of that sort with Apollo hospitals?
Not to my knowledge, yes.
Okay, fair enough. So HDFC ERGO in play for Apollo Munich. I mean, essentially Apollo's stake in Apollo Munich, which is 51%. Munich would like to retain its stake.
And HDFC Limited is the stock that we can watch out for. Of course, a much smaller portion of HDFC Limited universe is this general insurance company. But yeah, that's the stock, that is the company which holds 51% stake in HDFC ERGO in partnership with ERGO.
Okay. The other insurance play in the market, of course, has been IDBI Federal. I mean, that's life insurance, and we've been reporting on that as well. Maybe that will also come to fruition sometime.
So the market trending weak, actually down about 0.7% and sub that 10,500 mark on the Nifty. In fact, it's at the low point of trade right now. Look at the MIDCAP index. There, the fall is of 1.25%, and taking quite a bit of a knock. Actually, 250 points gone, 220 points gone on the Sensex. And, some of the stocks which are actually dragging right now, so Eicher Motors, India Bulls Housing, a lot of these banking names continue to hurt. And outside of the index, names like, say, some of these NBFCs, in fact, so Manappuram, L&T Finance, other than that, Bata, Bharat Forge, all of these are stocks which are actually heading low, continuing to lose out. And of course, Fort is seeing quite a ride, now down about 9% odd. Nalco, Sun TV, some of the other top contributors on the downside. But here's an interesting conversation. Akzo Nobel, which is a Dutch paints company that makes the Dulux brand of premium home paints, is slowly expanding their focus on the mass product segments to compete with giants like Asian Paints. However, the global CEO of the company says they will not go wild with expansion. Here's more from my colleague Archana's chat with the global CEO.
I think we would be disappointed, but don't tell it. The local team would be disappointed if it didn't grow at a 10% a year as such, and also bringing then the profitability along.
For Akzo Nobel, industrial paints has been the segment where you've focused on. That's the largest segment contributing to revenues. What is the revenue mix right now if we talk of decorative paints and industrial? Well, and going forward, do you see that change? Actually,
decorative paint is the largest part of it. I think both of them have been growing at about the same pace, I would say. If I look at decorative paint, that is really GDP business. We have plenty of opportunity, great team in place, so I think that's going to grow at this famous 1.2 times the GDP. If you look at industrial coatings, the growth rate might be slightly higher because we are in segments that are very fast growing. In the whole coatings industry, powder coatings is the fastest growing segment. And that's exactly where we are very strong.
And you speak about being in the premium product segment. Despite being in a premium product segment, your margins in the India business have not been as strong as your competitors. What's the plan there? How are you looking at the margin picture?
Well, if you look at the can of paint itself, I think we're holding our own. Of course, the larger you are, the more that you can actually leverage your volume over your cost. And that's what we're playing on. In fact, this investment here in the powder coating is definitely one that's going to help. What we try to do is having highly specialized products that basically bring a good margin and adding it there where we can bring the most value as such.
What are the key challenges that you're facing right now? What are the headwinds that you think your company here in India in the business as well as globally is facing, which could slow down the growth that you are anticipating?
Well, two things. One, the whole industry has been suffering of raw material increases quite significantly. I mean, if you look at some key raw materials like titanium dioxide has been going up in price quite a lot, and that's a significant cost factor. So that has driven the need in the whole industry to try to get the prices up for our products. And that always gives a lot of dust cloud in the market on who goes first, etc., etc. So raw material cost has been a big item.
Okay, absolutely down and out is essentially the report on the market. 80 points down. I mean, actually, there has been about a 45-point cut on the Nifty in the last 15 minutes or so. 45-point cut on the Nifty in the last 15 minutes. So this has been some selling, and it's basically fallen like a ton of bricks. If you were hoping for some recovery, exactly the opposite has happened. Even as there has been really no shakeout or sell-off in global markets. I mean, you can look at the US futures, Europe, etc. But here, there's a huge sort of selling pressure, which is very, very visible. The Bank Nifty is down almost a full 200 points. 25,233 is where we're at.